How's it going, Vechain family? It's Louis Crypto here, back with another update. We can see that Vechain is coming down. So in today's update, I'm going to show you where it's exactly going, the reasons why we are going down, and we'll maybe even go through a little trade that I took on Vechain last week. So don't forget to like, subscribe, comment, and share. And please do enjoy this vet update. Now, we had this big run up into a key area of resistance a few months back now, and we can see that we reclaimed this support. All we needed to do was flip this area into support, but we can see it was eventually lost, confirmed as resistance, resulting in this big dump. Now, I remember talking about this bullish divergence playing out over here. I think it was the daily time frame. Yeah, so we were seeing this momentum cloud going up while this is actually continuing lower. So it's just showing us a disagreement and that price should come up. But the question then becomes, where is it coming up to? And now we can see that we didn't exactly touch that purple box, but we can see that we came up in and around that area. Because as we place the Fibonacci's from top to bottom of the move down, we can see that the golden pocket sat here at 1831 to 1854, slightly beneath this purple area, but we can see the 200 EMA there. So while we are beneath this 200 EMA, this acts as our top of the market, and the fibs being placed here as well, basically, and also this support now as resistance is just showing us that this is the key area that is going to act as our top of the market. And if price can push through this point, it then becomes our floor, as previous seen to the left over here. So that would have been a very big bullish statement if we would have been able to flip in support, and we would have been going up in an upward trajectory. But as we saw this wick rejection at those three levels, so being the golden pocket, the purple box, as well as the 200 EMA, all these three factors saying that this is a brick wall of resistance, then we got our confirmation right over there with that bearish candlestick pattern being the shooting star, looking for these at points of resistance and lower highs for potential shorts. And you can see that would have been a very nice and profitable trade, being up on the daily time frame. If you just took that daily candle and sold, it would be a 6.5% gain to the downside. Yeah, you would have gained that, but it's gone down 6.5%. So now, as we've known that we're looking for rejection at some point, which is again the golden pocket, this is the highest we should have come up to, well, the 200 EMA, but this is the point of reversal. So at this point of reversal, we're looking for entries. So we had that one over there, you'd be up 6.5%, as you can see. But if we scale down to the lower time frames, you can see I had a little trade over here on the 15 and 30 minute time frame. But even on the 4 hour over here, you can see that wick rejection. So it's the same candlestick pattern that you saw on the daily over here, but also on the 4 hour. So bringing this some more significant further confirmation that you're on the right path if you believe that this is going to be a top. Now, there were some bearish divergences as well. As we can see, this was our first original top when we came down, had a daily bullish divergence that sent us back up into that same area. And we can see that price was trending downwards over here, but it's quite the opposite, and it's very slight. But in this exact same area, if we go to the top of the blue cloud right there, drag this across, we can see that if we put it on top of that blue cloud, we got the two prices, so you can actually see that they're different. So the first point, if we look at the lower level, the first point is the 761, so 76, and then this second point is the 79. So we've got slight higher highs over here. So with that, we call it bullish divergence. As on the chart, we're getting the lower highs, and here we're getting those higher highs. So a disagreement in a place of reversal. And I didn't actually see this 4 hour one, but when we scale down to the 30 minute and 15 minute, you can see why I did take an entry over here. I think it was exactly the 15 minute time frame. So we saw all those signals at the resistance point, the daily time frame, with those three factors being the golden pocket, the 200 EMA, as well as a level of resistance and support in the past. And then on the daily, we had that shooting star as well as the 4 hour. And now on the 15 minute, I was quite late because all of those signals were up here, but as you can see, price came down and retraced. And when it came up for retracement, which would be from this point to this point, you can see we came up to that golden pocket again. So in this area over here, I'm looking for those reversal patterns, and we had that bearish divergence where prices continue higher, but the momentum waves are coming down. So this has been a nice short opportunity back down to the golden pocket over here. So playing in between the golden pockets. I do teach this all in my course and mentorship. The best option would be to do the mentorship, and in over this next month, few month period, I'm going to be teaching 3 people. So if you want to become a student of mine, message me through the twitter.com, and you can find all the benefits that you receive, such as 5 to 10 hours of one-to-one help with me, as well as 2 weekly group calls as a in my Discord community, which you'll be part of for free for 3 months. And you're also going to get my 6-hour long course, all included in that one price for the mentorship option. So yeah, if that's something that you're interested in, just private message me on Twitter with all the links you need in the description of this video. So heading back out to the 4 hours, so you can see this a little bit clearer. But yeah, we showed you that little trade right there. Essentially, we continue on this bearish path simply because we lost this key area support. Now I'm actually need to zoom back into this area because I do have some fibs I need to show you, and I just turned them off for the beginning of the video. So here you go. So from those original fibs where we saw the golden pocket being tested over here, which was our target out of the trade to the downside on the 15 and 30 minute, which we saw a little bit clearer, we can use those same old fibs, and it's showing us if this is ever lost. So at that time, we're taking it just to there, just because even if we were targeting down here, we can see this eventually played out, but look how much longer it would have taken. I took this trade in 2 red 4-hour candles, but if I had my take profit all the way down here, I'd have been in this trade for a much longer period of time. So in my eyes, it's better to condense and cut trades into multiple ones. So at those points of bounces, that's where we can just cut it out, because if we hadn't had our our take profit down here, we can see eventually our stop loss would have been met and tapped, and eventually went the way we wanted it. So it's better to just dissect these, and you can get nicer risk to reward plays over here. So this would suggest if we're getting a 3.5 risk to reward here, if we get the next 3 wrong in a row, we'd still have half a reward in profit. So it's a very profitable strategy that I do teach of, and it would actually be better if we can get more than 3 to 1s. And for example, last week took a Casper trade that was a 5 to 1, looking for a 7, but we only managed to get 5 out of that. But yeah, heading back over to Vechain, this is the point where we were meant to find support. We did, and look, if I had my take profit lower, stop loss in the same place, we would have missed take profit but hit stop loss. So that's why I dissect the trades. And then if this fails to hold, you create something called a reversal wave, where eventually you come down to these 3 sets of targets. And over here, we're trying to look for some bullish divergences, because it could be giving us a pump. As we can see, we've got a lot of moving averages at the 1 fib level. So even if we do pump, it's going to be maxed to 1691, and then look for continuation lower to the 1618 at 1628. So yeah, at the moment, if we do get some bullish divergence, let's go check the 1 hour quickly. There might not be any, but yeah, actually there are. So here we got the lower lows, and here we got the higher lows. So this is just creeping up while this is creeping down. So if we do start to come back up, I would see the 1691 area, the 1 fib, as a local top, and then for us to continue down to the 1618 at 1628. Thank you guys for tuning in. If you want me to teach you how to do this on your own, just private message me. I've got a course which is the way cheaper option. Do that in your own time. You do still get 3 months access in my community. Join the chat anyway, because we do the weekly group calls, and I'll post these divergences on there for you guys to trade, and any chart requests that you guys have. It's just a community where you can basically reach out to me, and I'm there to help you guys as much as possible. Otherwise, do the one-to-one mentorship plan, where you're going to get all of this for free. You're going to get my course for free, that's 6 hours long, so you fall back on that, you have that for life. You're going to get my 3 months free in the Discord community, where we do 2 weekly group calls in there a week. Also on top of that, you're going to get what you're paying for, which is those 5 one-to-one sessions with me, or 10 hours of one-to-one sessions with me. More information, just message me over my Twitter, links in the description down below. I'll catch you guys in the next one, and as always, peace.